It's great to have your company for the weekly this Friday, the 27th of November. I'm Jessica Amir, market analyst with Bell Direct. Well, the Aussie share market has continued to break records this month, up 12% in November, putting the ASX 200 on pace to close off its best month ever. In the week, the market hit another 9-month high and turned positive for the year, meaning the market has just about recovered all of its COVID-19 losses, but we still need to gain about 7% to be back in record high territory. Year to date, the energy sector, utilities, industrials like airlines, property and banking stocks are still underwater, but given a vaccine could now be available in 4 to 10 months' time, these sectors have benefited the most from investors' attention. Year to date, we know Unibail-Rodamco-Westfield, URW, is down 55%. The property giant is raising €2 billion via a bond issue to reduce its debt, and this week its shares were one of the most bought stocks, seeing its shares charge 9%. URW's chart also suggests it's about to enter a bullish uptrend. Flight Centre FLT down about 54% year to date, but FLT is a Bell Potter buy, also backed by Morgan Stanley and UBS. FLT is raising $400 million to repay debt and keep cash levels at bay until mid-2020. Now this week FLT shares soared 11%, making it a top performer, and FLT's chart also indicates its shares are about to enter a bullish uptrend, with its 50-day average about to cross the longer-term 200-day average, indicating future growth. So FLT could be worth a look. Webjet is down 37% this year. It's a UBS and Ord Minnett buy, and its chart just entered a bullish zone as well. Now this week, Web shares gained over 11%. And energy stocks still down the most this year. All Search down 46, Origin down 37. The coal company, Whitehaven Coal, is down 43%. But this week, Whitehaven rose the most in the ASX 200, up 16% on the back of an improved coal outlook. Now its chart suggests it's likely to break out, and Bell Potter labels Whitehaven as a buy around these levels, or about $1.55, expecting over 100% share price growth in a year. Other energy plays with buy ratings include Origin Energy, which is backed by UBS and Citi. UBS also backs Santos, Woodside Petroleum and Worley Parsons. A key consideration though, oil bodies and economists are expecting the oil price to remain weak in 2021, given the lockdowns and the shift to working from home. So the question is, how much can oil companies' earnings grow? So what's the takeaway here? Well, you've got two things: stocks that will do well and will benefit from the return to normalcy, and secondly, stocks that will continue to benefit from the stay-at-home economy. Now, given these two polarizing views, what we're seeing is that smarter investors are diversifying their portfolios to benefit from both scenarios playing out. So for some food for thought, changing pace, of all the changes to markets this year, it's worth looking at how the Aussie share market has changed. Banks' financials make up the biggest part of the Aussie share market, but their slice of the pie dropped from 30 to 28% as banks' profits have been squeezed as interest rates dropped. Now the mining or materials sector became a slightly bigger part of the market, up from 18 to 19%, fueled by commodity prices rallying, and iron ore shipments are increasing too. But the most significant change by far has been the growth of the IT sector, up from 3 to 5%. Now, that's because Afterpay shares grew 227%, seeing the company grow from the 59th biggest stock to a top 16, forcing index managers to buy its shares after its meteoric rise. Also of significance, Coles grew from the 22nd biggest company to a top 15, while CSL overtook CBA as the biggest company in Australia. And thinking about what's ahead, well, if history is anything to go by, we're in the midst of the most bullish period for markets, called a Santa rally, where markets traditionally rise from now to mid-January. Over the past 25 years, from November to Jan, the market has rallied 70% of the time. Now, markets are bullish around this time as consumer spending stocks generally benefit from Black Friday, Christmas and Boxing Day sales. Plus, at the moment, there's so much FOMO in markets. Investors are jumping in, not wanting to miss out, knowing a vaccine is going to be in the US, or could be in the US, in just a matter of weeks. Markets also like that the former US Federal Reserve Chair Janet Yellen is likely to be the US Treasury Secretary. We've got record low interest rates and the economy opening up. Now, this all supports share market growth. But as always, expect the unexpected. So what to watch next week? Well, the RBA meets on Tuesday. Rates expected to remain on hold. Economic growth out for the September quarter on Wednesday. Expected to show the economy grew 1.4%, meaning Australia may surface from its first recession in 29 years. Now, if growth is stronger than that, banks and consumer spending stocks could rally. If it's worse, then there could be selling in those sectors. And retail sales are out for October, likely to have shown spending rose 1.6%. So keep an eye on that. So there's plenty to consider for your portfolio. From all of us here at Bell Direct, have a happy and safe weekend. We'll see you next week.